Welcome to the deep dive. Okay, so our sources today point to something pretty startling. The market. It's not really debating climate change anymore.
No, not at all. It's decided. It's an economic fact now.
Right, and it's turning this crisis into what they're calling a trillion-dollar opportunity. So our mission today is figuring out how exactly that's happening.
Where the money's actually flowing.
Exactly. So maybe let's start with a bit of history. Because energy and power, they've always been linked, right?
Absolutely. Think about it. Coal fueled Britain in the 19th century. Oil basically defined America in the 20th. Empires run on what they burn,
Power is tied to resources.
for sure. And what's kind of wild is how long the warnings were, well, basically ignored. You had Arrhenius talking about co-Euro warming back in 1896.
Wow, that early.
Yeah. And then Exxon's own scientists, in the 50s, predicted the warming trends pretty accurately.
But it got buried.
Well, yeah, you can't exactly sell fear if it tanks your main product, right?
Yeah.
So the science stayed internal for a long time.
Which brings us to that big shift around the 90s. Governments finally acted, but the move wasn't stop polluting,
No, it was let's price the pollution. That was the pivot.
monetizing it.
Precisely. Not ending emissions, but turning the ability to emit the smoke, the risk, even the fear into something you could trade, like an asset.
And that led to things like carbon credits from
Yeah.
the Kyoto Protocol.
Exactly. The first global market for pollution permits. And it's massive now.
Like the EU's system, the ETS.
Yeah, the European Emissions Trading System. It handles, what, over $1 trillion a year in trades? It's huge.
Okay, but here's the catch the sources point out. The system seems kind of leaky, porous.
That's a good way to put it.
Hmm.
The problem became these offset projects. Planting trees, protecting land.
Sounds good on paper.
Right. But often the impact was minimal, or the land was already protected anyway, so it just became another cost of doing business almost. Pollution gets a price tag, but keeps happening.
So it's less about reducing, more about financial maneuvering.
In many cases, yeah. It turned green into a kind of financial story.
Okay, so if pricing the smoke was step one, the sources say step two is, well, even bolder, pricing planetary stability itself.
You're talking about catastrophe bonds? Cat bonds?
Explain those. They sound intense.
They are. So investors buy the bond, get interest. But if a specific disaster hits like a hurricane or wildfire, meeting certain conditions, the issuer, say an insurance company, keeps the money to cover their losses.
Wait, so investors are literally betting on whether disasters happen.
That's essentially it. It's a hedge against disaster risk, and it became like a $40 billion market by 2023.
40 billion, wow. And that ties into this idea of climate alpha.
Yeah, climate alpha. It flips finance on its head. Usually discount future risk. Here, the worse the climate forecast, potentially the more valuable your hedge becomes.
So you profit from correctly predicting the chaos.
In a way, yes. You see it in things like water rights becoming more valuable, or certain farmland or property at higher elevations. Anticipating the shift has value.
Which leads to the next layer, the branding. ESG investing, environmental, social governance, that exploded, right?
Oh, massively.
Yeah.
Past $40 trillion by 2022, it was pitched as, capitalism with a conscience.
But did it work out that way? The sources seem skeptical.
Well, the definition of sustainable, or ESG, got really fuzzy really fast. There wasn't one standard.
So you end up with, what, oil companies and ESG funds?
Exactly. Fossil fuel giants showing up in portfolios meant to be green. It allowed investors to feel good, maybe, while still investing in, well, the same old structures. Sustainability became a marketing tool.
A veneer of virtue, as one source put it.
Pretty much.
Yeah.
And while all this financial stuff was happening, the physical economy was shifting too. Towards renewables, yes, but that created its own issues.
The new extractive empire based on minerals.
Right. Lithium, cobalt, rare earths, you need them for batteries, turbines, everything. So the dependency just shifts.
From oil to minerals. And China's position there is?
Dominant. They control something like over 60% of rare earth production, maybe 80% of the refining. So it's a new geopolitical choke point. Mineral supply chains are the new power play.
Okay, so let's tie this together. Carbon credits, cat bonds, ESG, minerals. What's the common thread here?
It always comes back to controlling scarcity, doesn't it? Whether it's the scarcity of permission to pollute, the scarcity of stability, or the scarcity of critical minerals. The market isn't denying climate change. It's actively restructuring around it. It depends on it. in a strange way.
Every crisis point becomes a data point for profit,
Yeah.
and that brings it all back to you, the listener. Because this climate economy, it's creating a divide. There are those who can afford to adapt, buy resilient property, secure food sources, basically treat survival as a premium product.
Billionaire bunkers and farmland, that sort of thing.
Right. And then there's everyone else, facing things like insurance, pulling out of risky areas, or food prices soaring because of instability. The tough message here seems to be capital has already placed its bets. Your personal belief doesn't change the financial reality that's already being built.